financial argument, follow us on YouTube.
With us today is Craig HEMKE, aka Turd Ferguson, from TF Metals Report. Craig, thank you so much for joining us today.
Elijah, it's always a pleasure.
All right, now today we saw the metals really just drop significantly and then recover. 21,000 gold contracts were dumped on the market this morning in only 1 minute. What was your perspective on today's price action?
Well, we've seen this happen countless times before, Elijah, and it's an old tried and true cartel trading desk tactic where they blast price lower ahead of some news that they know is going to be gold positive. And the reason to do that in gold today was to get gold down so that any rally that came out of Mother Yellen's speech at Jackson Hole would keep price below 1,300. And it did. We were trading in a range around 1292, got to 1297 on a little bit of a downtick in the dollar yen. Then all of a sudden, as the dollar yen recovered back to where it began, gold was smashed for $15. Or worse than silver, it was smashed 40 cents. And so it has been a rather particularly egregious week of price management by the banks. And again, for anybody out there that says, these guys are always talking about manipulation. Look, this is not like some crazy theory. This has now been proven. It's the documents are out there in the class action suits, the collusion of manipulation by these bank trading desks, particularly in silver. All the evidence is there. It's in the public record now. But yet the people persist to believe that somehow this is a fair market. Silver has been pinned at its 200-day moving average for 12 consecutive days, Elijah. I mean, think of how really anything moves up, down, back, forth. Silver has been kept right at and below its 200-day moving average for 12 days in a row, my friend. And you want to know why? Well, the September silver, which is the front month options, go off the board on Monday. There are a lot more calls outstanding than there are puts, and so the banks are trying to mitigate potential financial losses by having price rise. And then the September silver contract goes off the board next Thursday. We know they always like to keep interest down there as well. So this is clearly a manipulative event we're living through, and these events today are just part of it.
Can you tell us a little bit more, actually, about what happened with the silver market today? Because I know, in the gold market, 21,000 contracts were dumped on the market. What did you see happen in the silver market?
A similar size, and it all happened pretty much at once. And if you pull up a chart, really of just the last week, you can see the action and the enforcement of keeping price below this 200-day moving average. There have been 4 or 5 significant spikes in volume this week. All of them have come on the downside right after price had the, let's call it the audacity of surging up and through that 200-day moving average. If you look at the charts this morning, we see really as much as 25,000 contracts trading in a very short amount of time. That's just an enormous amount of paper silver. We see the same old game being played in gold, where open interest is surging when speculators come in wanting to buy paper gold to get some type of gold exposure, because that's all they're getting, rather than price having to rise to seek willing sellers of existing contracts. The bullion banks that make the markets just simply issue new contracts to meet that demand and therefore keep price in check. Over the course of the last couple of weeks, we've seen open interest surge from 400,000 to 450,000 to now 500,000 contracts. It's just the same old game. It's not fair. It's not economic to anybody involved, but the banks make money at it, and so it continues.
Now, one of the big stories this week was about Fort Knox. The Fort Knox vault was opened for the first time in over 40 years. Steve Mnuchin, the Treasury Secretary, and other politicians visited Fort Knox, and they say, the gold is safe. But what is your perspective? You were talking about how precious metal prices are manipulated, and a lot of people in our camp in the precious metals and gold community have talked about this, and how maybe the gold in Fort Knox and the gold at the New York Federal Reserve has been maybe sold or leased out to suppress the gold price. What is your perspective?
Elijah, I'll just kind of go in a slightly different direction. There was a lot of news this week about the German gold repatriation plan that they announced in 2013 and said it was going to take them 7 years to pull back about 300 metric tons, which we all laughed at the time. And what a scam this was. You could do that, in a week if they wanted to. Well, anyway, they got it done. They announced this week here 4 years later, about half the time is what they expected. But if anybody was around back in the day, they'll remember that when Germany first repatriated some gold back in 2013, they quickly took it and did some of this in New York, did some of it in Switzerland. They quickly took it and recast it, wiping out, whatever serial numbers might be on there. But I think more importantly, they tried to raise the level, the purity of that gold, reassay it and raise it. And at the time, everybody went, well, because they're getting this coin melt gold, because that's primarily what is in Fort Knox, is what's called coin melt gold, from all the gold that was confiscated in the 30s. And then that was in coin form and then melted down and poured into these 400-ounce bricks. That's coin melt gold. It's 90% purity, where the international standard now is 99.99% purity. And that was why the Germans had to reassay and recast all those bars. And that's, again, where would the Germans get coin melt gold, right? It would come out of Fort Knox. It would come out of West Point. It would come out of the Federal Reserve Bank in New York, all these different places. So, yeah, there might be some gold left there. But it's like any other unallocated account, though. Who has the clear title? I challenge anybody to go in there and whatever gold is left, pry it out of there, right? I mean, whoever holds it owns it. But it's the whole paper scheme that has been foisted upon us now for 40 years, all this alchemy that the bankers have done. You may think you own gold. You own a piece of paper that says you own gold. When push comes to shove, whoever actually has it is going to keep it. And the music's going to stop. And for the gold that's been levered and hypothecated 100 times, those 100 people all think they own an ounce of gold, but really only one person does. The other 99 are going to be left holding the bag. And so at the end of the day, it's kind of more of an indictment on the system, draws attention to the system, what a scam it is. But it does persist. And, there's not much we can do about it on a daily basis, except, recognize that eventually it will fail, because all systems based on fraud and deception ultimately do fail.
No, you were mentioning about Germany's gold, and it was kind of funny about, 4 years ago in 2013 when they announced, we want our gold back from the New York Fed, and the New York Fed had 300 tons they were going to ship to Germany, and they said, it was going to take 7 years, just like you said, and here 4 years later, they're done. They got done before they were thinking of doing it, but still, what is your perspective on why it took 4 whole years when, like you were saying, they could have just done it in a week?
Exactly. That way, anybody can go back and look all this stuff up from 2013, because there was all kinds of discussion. And when they did like 7 metric tons the first year, everyone, what? 7 metric tons? You could do that pretty easily, and especially to take it from Paris to Frankfurt, which is like a 1,000-kilometer drive or something like that. And anyway, it's just the whole system is designed, it's built on fraud and deception, and to make people think that there's plenty of gold laying around. No, what's plentiful is all of this fake synthetic digital gold, whether it's held at UBS or the Perth Mint or any of these things. It's all a big, massive scam and a confidence scheme. And so why did the Germans need what was going to be 7 years to get their 300 tons? Because it takes that long to get it, to shake it free. So anyway, this is just the same old story for people who have been in the metals for as long as I have. All we can do is just kind of grin and bear it and know that, like I said, eventually the economics are in our favor, and any system built upon such a massive level of deceit and fraud just isn't going to last forever. And so we just have to wait it out.
Now, you were talking about how this week the precious metals have really been capped, it seems like, about every day. What is your perspective on what happens if gold breaks above 1,300? Well,
if anything, on gold, that's clearly the thing, right? They want to keep gold from breaking out to new 2017 highs. That's what we have said all year long was going to be the case. We were going to make our highest moves in the fourth quarter in kind of a 3 steps forward, 2 steps back pattern. That's exactly what's happened. So that's what they're trying to do in gold, is trying to manage perceptions and manage demand, right? Because as for gold, demand, especially in the West, goes up as price rises. So there's always that thing that the bullion banks are trying to do, is they try to manage the actual physical supply versus this joke of a paper price process. In silver, though, it's more urgent in terms of financial need. 4 or 5 banks control the trade. Again, we know this now. It's ongoing since 2011. Again, I would invite anybody to look this up. In December of 2016, all of this information came out about, and it's from the legal discovery process of those class action lawsuits against some of the big banks up in Canada. And we have all the documentation showing the texts and the chat rooms and the emails and everything else. Hey, let's go carpet bomb silver today. Okay, that'll be fun. Well, where the hell is the CFTC? I mean, it's 8 months later. That's an open and shut case. They've done nothing. So they allow it to continue as co-conspirators in the process. So as we look at price today, this week, the last 12 days, what is happening? It's more urgent in silver because the banks are on the hook to pay out in cash any call option that ends up in the money. Well, there's almost 10,000 calls that are between $17 and $18 in COMEX September silver. So why is price slammed back down on all these occasions like today to get it back below 17? Well, there you go. Because on Monday, those options expire. And anything that expires in the money, the banks have to actually pay out in cash. So they're doing everything they can to slam it back down. They have the unlimited, unfettered ability to create as many paper contracts as they need to soak up spec demand and then also overwhelm the bid as they did this morning and smash price. It is a scam, Elijah. It is a fraud. It is a crime. Yeah, nobody cares. You care. I care. A handful of us that own silver care, but that's about it.
I know a lot of us are discouraged by the manipulation, but isn't it true that manipulation can't last forever? So isn't this just a buying opportunity right now?
No, it can't last forever. Now, that doesn't mean it's going to end next week or even next year. But again, as I mentioned a couple times here, no system based on fraud, deception, and lies is going to last forever. And this is a scam. It's a confidence scheme of the first order. And eventually, physical demand will overwhelm the ability of the banks to deliver physical metal at the paper price. Whether that comes out of the next global financial crisis, whether it comes just simply from somebody showing up to get their gold and being told, no, come back in 6 months and we'll have it for you. And you start the ball rolling from there. But one way or the other, eventually, physical demand for the real thing will break the banks of this scheme that's been in place now since 1975. But again, the hard part is knowing when. The proper course of action is just simply be patient. Recognize the math, recognize what's being done, recognize the risk that you're running by not only owning physical gold and silver, and just gradually accumulate it over time on a dollar cost averaging basis and prepare for the inevitable.
All right. Well, Craig HEMKE, thank you so much for joining us today. Before we let you go, did you want to quick share with our viewers any last thoughts you had and where they can find you online? TF Metals Report is the site. It is I think it's the best site on the internet for precious metals. And obviously I'm a little biased in saying that, but the crowd that hangs out there, we are free of the perma trolls and the perma bears and the losers that inhabit so many other sites. We have a positive discussion there. We're all in it together. We're trying to see each other through this just ongoing